welcome to the video number 1 of the cryptocurrency course. So let's jump straight to what is a cryptocurrency. A cryptocurrency, first of all, is a digital asset. I know it can be confusing to a lot of new investors or traders. It's a completely digital asset. There's nothing physical. I know you might have seen people selling physical objects as decorations that represent cryptocurrency or Bitcoin, Litecoin, but make sure it is a digital currency and physical objects sold are only representations, but they are worth nothing. Okay. Cryptocurrency is first of all a medium of exchange. So a peer-to-peer exchange that is accepted. It uses a cryptography process. Okay, I will define the cryptography process shortly. And the cryptography process was there before cryptocurrencies. Okay, that is why cryptocurrencies where they took their name from. It's anonymous, meaning that you can have as many crypto or Bitcoin addresses as you'd like. And the only thing representing your wallet or address is a key. Okay, so that key is most of the time a number, okay, that's going to serve to encrypt and decrypt your transactions. And you can, when you open a new wallet or a new cryptocurrency address, that you're going to be given a new key. All right, so you can have as many addresses as you'd like. It is outside of the banking system. We'll get more into it later on that subject. However, it is really important to understand that the normal or the traditional transactions are made with a middleman, and the middleman is the bank. All right, so in this scenario, we do not have a middleman. Okay, we removed the middleman. That's why it adds on to the fact that it's anonymous. Okay, so I added a image here to explain you or simplify the cryptography process. So let's pretend you are trying to send a certain amount of Bitcoins to someone else or to a certain address, okay? The key you have is going to be used to encrypt your order and then decrypt it and send it to the receiver. There's a whole process between the encrypt and decrypt, and we're going to cover that later. But this is just to give you a mental image of the cryptography process. Okay, so it's a process with keys, okay, that enable to encrypt your order with the code, okay, so the key, and decrypt with the same code, allowing the receiver to actually unlock the coins you're sending. All right, so we will get to that process more in detail in the course. I would like to cover also the similarities with the stock market. Okay, many new investors are probably questioning cryptos and wondering what are the similarities or differences between a unregulated market like cryptos and a regulated market like the stock market. So stocks represent companies listed on the exchanges, okay, depending on which exchange. Okay, could be the Toronto Stock Exchange, could be the New York Stock Exchange, could be the London Stock Exchange. All right, so it's companies. But cryptocurrencies, in a sense, we will realize that more in the course when we will talk about ICOs, but cryptocurrencies are also companies that have marketing plans, concepts behind, and business plans, okay, just as normal companies have. When you trade stocks, you become a shareholder of the company for the time you hold the stock. Okay, so you become a partial owner of the company, what we call a shareholder. When trading cryptocurrencies, you are basically an owner of a portion of the coin supply. Okay, because some coins are going to have a limited supply in coins. Okay, of course the supply can increase, however for a certain period of time there's a limit of coins that can be produced. Okay, for example, right now the maximum, well, the cap for Bitcoin production is at 21 million coins. Okay, so it is possible to increase that cap, however for now it is 21 million coins to be produced. So when you own, for example, one coin, you are basically a owner of a portion of the total coin supply. So there are similarities in between, okay? Because companies can release a cryptocurrency representing their company. Okay, we're gonna get to examples more in depth when we cover ICOs. But this was just to present the similarities. However, companies, when you trade stocks, you're trading companies, and when you trade cryptocurrencies, you're trading a digital asset, okay, that is unregulated. So that is the main difference. However, I just presented you a couple similarities that can probably help you to understand further the process. So how does it all work? Like I mentioned in the beginning, conventional payment methods use a middleman, okay, which is the bank in most cases. The bank that will rule the transactions, take a fee, and dictate when you can transact and when you cannot. Okay, and in some cases, the bank can freeze the money you have in the bank, or even freeze it where when there's economical crisis. And you know the example with Greece, when the economic crisis hit, banks were forced to freeze people's money inside the bank, so they can use it to restore the economy. And that prived a lot of people from their money. So that cannot happen in a cryptocurrency market using cryptography. Um, so cryptocurrencies are decentralized. Like I said, no banks and no regulator. Okay, no one regulates the cryptocurrency market. However, there's a form of regulation that I'll just go over right now. So transactions in the cryptocurrency market, okay, I'll stick with the Bitcoin example, okay, as it is the most recognized cryptocurrency today. So transactions are processed by a large network of computers forming the ledger, okay, called the blockchain, who are verifying each transaction made. Okay, I will get to the transaction process later. However, stick to the core principles here. The verification process is made by what we call the miners, who own computers, processing devices running a Bitcoin mining software, or what we call a multi-miner software. So as I will explain later, the Bitcoins are mined using computational processes, and each computer forms a huge network And when one single person wants to make a transaction, either buying or selling or just sending Bitcoins to someone else, that single transaction is going to get verified by each and every computer forming the network, therefore verifying if the transaction is legitimate, and that if it is, computers will let it pass and it will go to the person, or the transaction will be made. The software will group transactions into blocks, okay? And like I said, it is a process requiring a lot of processing power. And that processing power, the reward of that is that once the miner successfully completes a block, a coin or a portion of a coin is deposited to the miner's digital wallet. You can make as many wallets as you want. Like I said, there's only a key that you should keep. You should recommend it to keep that saved, and that's the only thing representing your account. So there's no name behind it. That's why it's anonymous, and you can make as many wallets as you want. Miners will mine until the coin cap is reached. Okay, 21 million coins, like I said, in the case of Bitcoin. So let's summarize again this process. Okay, so when, for example, if I want to send Bitcoin to someone, Bitcoins are originally mined. Okay, that's where they come from. So each computer that mines Bitcoins, in order for retailers to use them, or for miners to use them, form a huge network. Okay, and that network, when I said there's a form of regulation, it's because when I try to send a Bitcoin to someone, that process won't be made instantly, because my transaction will get verified by each and every computer forming the network, okay, what we call the ledger. Okay, and I will explain more in detail how a block is formed. But a block, like I mentioned a little here, is formed with a group of transactions. Okay, and each time a block is formed, the miner who formed the block gets rewarded of a coin. All right, so don't worry, we will get to it right now also. So the Bitcoin transaction cycle, okay, probably the most straightforward image you'll get on that. So let's say someone opens his Bitcoin wallet, so there's a key, okay, or a confirmation number, if you want, associated to that wallet, okay, to that Bitcoin wallet. And you have an address, okay, in order to receive and send. So let's say Rob wants to send Laura a 0.3 Bitcoin, okay, or let's say a Bitcoin. Laura is going to send her address, or Rob is simply going to scan it, okay, and he's going to fill the amount he wants to send. If he wants to send 1 Bitcoin, he can. If he wants to send 0.005 Bitcoin, he can. And there's a fee of transaction, of course. He clicks sends. Okay, that's the user part. Okay, now comes the machine verification part. Okay, the wallet is going to sign the transaction using Rob's private key, okay, which is associated with his account. Okay, and up to this point, there's only 10 seconds that passed. So the network is going to validate if the transaction is legitimate. Okay, if it's not a counterfeit or anything as a fraud to the Bitcoin ledger. Okay, so to the Bitcoin community. Okay, to make sure that Rob is not trying to fraud the Bitcoin community, you know, that would alter the price and the supply of Bitcoin. So when it's validated, the Bitcoin miners will include the transaction in the next block to be mined. So now comes the mining part, okay, where the computational process comes in, and that complicated computational process that requires a lot of energy is going to be rewarded by the miners who solve the proof of work, what we call, so forming a new block, okay, which will reward them with a portion of Bitcoin or a Bitcoin in order to make that transaction. Okay, again, it's going to be verified and then sent to LoRa. And then there's a second confirmation as soon as the block is created. Okay, so this process makes the Bitcoin ledger or the blockchain process, the blockchain technology, almost impossible to counterfeit. Okay, so users cannot lie to the Bitcoin ledger, as every single transaction is verified by the whole network of computers. Okay, so it's not people who are verifying it, it's the computers, the mining computers. Okay, we'll get to that later. The mining computers who verify that transaction and make sure that transaction goes in compliance with the supply of Bitcoin and with Rob's private key, okay, associated to its account. All right. Now, who created Bitcoin? There's still a mystery behind the creator. There's several rumors or stories behind who created it, but a name stands out, and that's Satoshi Nakamoto, which also one Satoshi stands for the smallest unit of Bitcoin, so 0 followed by 5 zeros and 1. Okay, rumors say Satoshi was looking for a way to remove the middleman from the banking system, basically to give back the power to the people, so the bank would not be able to control that money, that form of money. So he came up with that process, with that blockchain technology of that, using cryptography to validate and to accumulate a cryptocurrency digital asset. Okay. Now we will get to how to read coin statistics. Okay, how to read a Bitcoin chart or any other cryptocurrency chart. So the picture I have right here is the Bitcoin price, USD price, from the website coindesk.com. Okay, so you can get that chart from several websites. You don't necessarily need to use this one. So I will show you now basics of how to read the numbers that are given to you. Okay, so first of all, the time frame here. Okay, this chart represents 1 day of fluctuation. Okay, if I click on the 1 hour, this whole chart is going to represent the latest hour. Okay, 12 hour, same process, the latest, the past 12 hours, basically 1 week, 1 month, 3 months, a whole year, and all means from the beginning of Bitcoin. Okay, so from 0 to now, to the actual day. So by having the 1 day time frame activated, this number in percentage is giving me the change for a single day. So for today in percentage, okay, for the last 24 hours, Bitcoin made 1.39%. Okay, note that cryptocurrency markets are 24/7. All right, because there is absolutely no regulator and no one to tell it to close, as it is a peer-to-peer process and a network of computers that run every single minute. All right, so you can exchange and trade cryptocurrencies all the time. Often people will pair cryptocurrencies to another form of investment. That way they can trade both during the week, and then during the weekend they have the possibility to still trade cryptos, as all other forms of investment are closed, okay, closed to retail. So today's open represents the price at which the day opened. So in this case, $9,144. Today's high is the highest point Bitcoin went today. Today's low is the lowest point Bitcoin went today. And I pointed you out the change in percentage, but this is the change in dollar, okay, dollar wise. So from here to here, it's currently $127 positive change. The supply is the number of coins that are in the market, okay? And the market cap is the value of all those coins, okay? Coins increase every day with the miners, because you got a huge network of miners who mine the coins. That way they can sell them and profit from it. So you get that market cap number simply by multiplying the supply number to the price, okay? So the biggest the market cap, the more coins you have, or the more the coins cost. You also have on multiple platforms, you have the possibility of exporting the chart. If you want to use it for any statistical analysis, you can have custom dates, okay? So that is a great website to simply check the chart like this. However, there's different platforms available to trade them. So Bittrex, Binance, and Coinbase are the majors. Okay, I'll go over each one of them, but for the purpose of the course, we will focus on Bittrex. Okay, I will mention the other ones as they are still major players in the cryptocurrency game. So as you know, Bitcoin is the main cryptocurrency, the most known and most traded cryptocurrency with the biggest market cap. However, there are thousands of what we call altcoins, okay? Altcoins standing for alternative coins, okay? That various groups will release and that you can trade for a much cheaper price. And that's what people are looking for to gain a big change in percentage, as these altcoins are very volatile. However, the altcoins are not offered by everyone, by every platform, okay? For example, Coinbase is going to choose to offer only the three main the three main cryptocurrencies, for example. Okay, so it's gonna have Bitcoin, Ethereum, Litecoin, for example, and it's gonna only focus on them. However, if you're only focusing on those coins, that can be a solution. However, notice that each platform has different fees and different ways of charging you. So make sure you evaluate each option um, before before selecting the one that fits your needs. For Bittrex and Binance, they will both offer thousands of altcoins, okay, on top of offering, of course, the major coins. So that's why it makes it so attractive for cryptocurrency traders to go for platforms like those, okay? Because you have a thousands of cryptocurrencies and you have plenty of choice for trades or forms of investment. Binance is also a very popular one that offers approximately the same amount of coins than Bittrex. However, we will focus on Bittrex.com for the purpose of the course. So how to read charts on Bittrex? Don't worry, there is a full video on how to use the tools on Bittrex. However, I will go over the basic ways to read a chart efficiently, the numbers associated to the chart efficiently. So as you can see, there's a time frame here. There are various tools that you can use on Bittrex, and we will get to it. Okay, don't worry. You have the possibility to share the chart if you want. You can change charts. You can put studies. I'm going to go over all the platform later during the video series. So, for example, this is an altcoin, okay, called New Economy Movement, okay, as you see here. This is an alternative coin, okay. However, how it is placed, you need Bitcoins in order to trade this coin, okay. So let me explain. In order to trade the value of New Economy Movement, if you think New Economy Movement will rise in value, okay, or appreciate in value, you first have to get Bitcoins. I'll explain you how to get Bitcoins later, okay, just stick to the basic principle here. You'll have to get Bitcoins first and then convert the Bitcoins to the altcoin you think will rise, okay? So let me go back to the previous slide. In this case, Bittrex and Binance will only allow you to trade the coins. But where should you buy coins? Okay, you have to find an app or a website that allows you to buy Bitcoins in order to send them to your trading platform and then convert the Bitcoins to a certain currency you would like to trade. Okay, so in this case, the reason I put Coinbase right here is because Coinbase will allow you to buy Bitcoins or different coins that allow you to convert them. And then when you buy Bitcoins with Coinbase, you send the Bitcoins from your Coinbase wallet to your Bittrex wallet. And then from Bittrex, you trade, okay? And that is why price here is indicated in Bitcoin value, okay, because it tells you how many Bitcoins that coin is worth, okay, the new economy movement is worth. All right, so that one new economy movement coin, which is an altcoin, is worth only a fraction of what Bitcoin's worth, what one Bitcoin is worth. All right, so let me go over this. Last represents the last price for the new economy movement. The volume represents the volume over 24 hours. Okay, same thing for the last. In Bitcoin, okay, same thing, it's presented in Bitcoin because you need Bitcoin in order to convert your Bitcoin into a different form of digital cryptocurrency, okay? The bid basically is if you're trying to sell that coin, okay? When I say sell, it means you are betting or speculating that the coin will lose value, okay? If you are selling that coin to the exchange, that is the price, the bid is the price you will get. If you're trying to buy that coin, this is the price you will get, okay? That comes with spread, okay? I'll explain the concept of spread right here. Some exchanges might put spread instead of bid and ask, but most will put bid and ask. The 24-hour high is the highest point this coin went in the previous 24 hours, and the 24-hour low is the lowest point that coin went inside a 24-hour range. So you can see that visually by changing the time frame, okay? I will get to the time frame in a different video, don't worry about that. Some exchanges will offer you leverage, okay? The concept of leverage is simple. Leverage is like a credit, okay? So when you have an unleveraged situation, if you invest $100, you will have $100 worth in the exchange. Okay, pretty simple concept, as the stock market works basically like that. You cannot invest more than what you have. However, some platforms will offer you leverage, meaning if you have $100, it will open you a bigger trade than you should usually be allowed. That way you can make more money with that same fluctuation. However, if you can make more, you can lose more. So be cautious with that. However, most are unleveraged. Okay, most are unleveraged. Now the concept of spread. Okay, why do they put a bid and ask, and the bid and ask is different from the actual price? Okay, it's because the exchange or the platform, in this case Bittrex, makes money by selling you or receiving your coins to a different price. So like I said, if you are trying to sell the new economy movement coin, okay, look at the actual price right here. It's 47.86. If you're trying to sell it, that's the price you'll get. That means you're selling at a lower price. And there's a difference between that real price and the bid price. And that difference, it's the broker, in that case Bittrex, who gains that. Okay, it's like a form of fee, meaning that when you open your trade, you start right away slightly negative and you have some place to cover. When you want to buy the new economy movement, the price that you have right here is higher than the exchange. And that difference between the real price and the ask price is what we call the spread. And like I said, the spread is a form of fee that the broker gains. Okay? That means when you look at a chart, or if you're looking to trade a particular coin, always make sure you look at the spread, because spread fluctuates, and without noticing, you could buy or sell a coin that has a very, very big spread, and that would basically ruin your trade. So always make sure you are aware of the bid and ask prices, okay? Reminding you that the bid is the price you will get if you're trying to sell, and the ask price is the one you'll get if you're trying to buy. All right, don't worry, we'll get into the Bittrex platform more in detail later. It is very important, okay, right now to understand that the cryptocurrency market is a market that is very, we call it in financial terms, a very event driven market, which means when there's articles or news concerning a coin or the cryptocurrency market as a whole, it brings a lot of volatility to that coin or to the cryptocurrency market as a whole. I will give you an example. For Bitcoin, each time a particular country says they're going to ban Bitcoin, for example, Bitcoin is going to get very volatile and the price is going to fluctuate, okay, in a matter of minutes, okay, to when it's announced. And when a certain country says they will adopt Bitcoin, it brings volatility and pushes Bitcoin higher, okay? Other types of news could be if a particular company is starting to use Bitcoins or a certain cryptocurrency as they will, for example, accept Bitcoin payments. Most big cities have already a few stores accepting Bitcoins, and we already have thousands of Bitcoin ATMs in the world. So all that forms events, okay? It could be a good event, could be a bad event. However, it forms events. Most of the time, if not all of the time, if you are waiting on the conventional news channels to inform you about a specific news about a coin, it's usually too late. That is why you should keep tab of specific websites that will focus on giving you fast news about cryptocurrencies, okay? Because if you pick, for example, your top 5 cryptos that you like to trade, it is very good and it is a must to keep tab of websites like the ones I place here that will give you various news, opinions, resources, statistics about different coins. And there's so many coins that a good news on a certain coin that you maybe never heard about could help you gain money on it. Okay, and that is why you should keep tab of that. We did a big portion right now of building your foundation of what is Bitcoin, how to read stats, how the blockchain works, and how the whole process of a transaction works. We did mention a couple things about actively trading the coins. However, I will get a lot more in detail about that as it is the main purpose of this course. So do not worry about that. If you're still hesitant about the core concepts, don't hesitate to go over this video again. In the next video, what I will show you is different trading styles. Okay, because the best way to be profitable in any forms of trading is having a trading style that fits our personality or our lifestyle. Okay, if you're a very, very busy person and you do not have time to catch small opportunities every day in the market, you have the possibility of catching bigger opportunities over the long term also. And I will also go over risk management rules. All right, so see you in the next video.